right, ladies and gentlemen, it's Aaron Fragnito back with another episode of the Passive Cash Flow Podcast. By the way, if you're enjoying our content, be sure to like and subscribe and share this with a friend who you think might gain value from what we talk about here at the Passive Cash Flow Podcast and the guests we bring on. Today, I have a very interesting guest. I have Joe Fulvio. How are we doing today, Joe?
Doing fine, Aaron. Thank you.
Excellent. So I wanted to have Joe on the show here. He is an IRA extraordinaire. He is an expert in helping people self-direct their IRA into alternative asset classes, which, we were just discussing a few years ago was really a very unknown thing. It's still very unknown. I think it's something like 5% or less of IRAs are actually self-directed, although that number is growing as more and more people learn about how you can self-direct your IRA into alternative investments and why there's some major benefits with that. Joe, let's dig into it here. Let's first start with a 30,000 foot view. Maybe give us a little background on yourself first and kind of how you got into the space as well, if you could.
Sure. My background is working with small companies, growth companies, new ventures. I've spent 40 plus years helping to get entrepreneurs past the startup phase. And I've done it on 3 continents, spent a good deal of time in Asia. That's how I came into contact with the owner of this company who founded Cama Plan 20 years ago, this past August. And he's been scaling his company, and I thought I could make some contributions, and I hope I have along the way. But I've been working with him since about 2015. And when I first met him, several years prior to that, I knew nothing about this. And he explained it to me, and I didn't quite get it. But hanging around this type of investing, I caught the fever. And so I was an active retail investor. And I have, for the past 10 years, been doing alternative assets. I do mostly private lending. I invest in some funds. I do some fix and flips. And I'm kind of like proof that anybody can do it, because it looks complicated from the outside, but if you do your homework, and there are a lot of people around who can help you do this, among the people would be us. We'd be happy to help you. So they're great resources to get you started on this, and it's a great way to invest. We call it a different way to invest.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, absolutely. People think about their IRA and they think, boring. I can't touch it till I'm 60, 58, right? Yeah, 58 and
59 and a half.
59 and a half now. Yeah. But you can self-direct it into alternative assets and actually take control of your retirement account and grow it ideally faster, or structure it to pay out to kind of grow in different asset classes, invest in things you believe in or operators you want to support as well. So let's kind of dig into the nitty gritty here. I'm going to give you an example, of a lot of, because about 40% of our investors use a self-directed IRA to invest in real estate. So it's really a great avenue to, get out of the stock market into real estate. So, a lot of our investors that come to us, they left an old job and they have a 401k there, and they put $100,000 into that 401k over, a 20-year period of working there, or whatever it is. And now they're working at a different company, and that 401k is just kind of chugging along. There's fees, maybe it's growing at below what the average mutual fund is growing at. And now they want to actually self-direct that out of real estate and into this 42-unit apartment building that we're buying in Passaic, New Jersey. So how would someone take an old 401k and then self-direct it into a real estate deal with People's Capital Group? How would they go about that?
Sure. It's a really common process. We have a lot of people who retire, or they move on, or they left behind orphan 401ks in a series of positions they held. And so we would help them open up a self-directed IRA here, and we would help them with the process of rolling over their funds from the 401k to their new IRA. With the case of rollovers and 401ks, the client would would go to the original, the sponsor or the owner of the 401k, whether it's at Fidelity or Schwab or whatever custodian is there, and initiate a rollover. It's not a taxable event, so you don't have to worry about taxes. The money arrives over here, usually in about 2 weeks with most of the major brokerage houses. Sometimes it takes a little longer. We've had teachers' savings plan people, and some of the public pensions will distribute quarterly. So sometimes someone will want to move money in, say, July, and they'll have to wait till September. We just had a case like that.
Sure.
But it usually takes about 2 weeks, and it's a little bit of a paper work exercise, and that you're going to have to fill out a few forms. But we'll help you open up your account. You'll tell us a bit about the rollover that you're going to do, and then you're going to contact your custodian that has your 401k, and they'll have an established process for doing this. This is not uncommon. You're not going to be asking them anything they haven't heard before, and they'll explain what they need on their end. You'll do that. About 2 weeks later, your funds are here. During that time, if you wanted to, say, invest with Peoples, you would execute the documents associated with participation in the People's Fund or in a real estate multifamily syndication or whatever it is that you're going to do with Aaron. And that usually consists of a subscription agreement or purchase agreement of some kind. There's usually an operating agreement or a private placement memorandum. And then, of course, one thing you have to do is get the wire instructions and the ways that Aaron would want money sent over. And we help with all of that. You simply log on to your account, indicate that you want to buy a new asset or make a new investment. You answer a few questions. You upload the documents you executed with Aaron, and within 48 hours, Aaron has your funds and is putting them to work. That's pretty easy. It's open the account, fund the account, make your asset purchase.
Right. And in the cash flow from that apartment building, does that go back to the person's pocket so they can go on vacation with their family, or does it go back to the IRA custodian there?
It goes back to the IRA custodian. Everything is done inside of the IRA. If if you're investing as a passive investor, you're doing it with Aaron, you don't have to worry about a lot of the nitty gritty with maintenance bills and carpenters and plumbers and tax bills and all that stuff associated with the properties. That's usually done within the investment vehicle if it's a syndication or an LLC. But if you decided to do that and you owned a piece of property, say rental property, all of the bills associated with it, the gas bill, the taxes, all that comes back to us. We send notifications to you that these bills have arrived, and you agree to pay them. And it's all done from within your account. You log on just like you do at your bank, and you operate your IRA as you would a business and that rental property as a business. People pay rent, they pay it to your IRA. So fairly straightforward.
Okay. So then people could also self-direct their IRA into, say, a beach house and then rent that house out, and the rent checks go back to the IRA custodian, and then the pipe leaks and you got to call a plumber, and then that plumber needs a check, and that check's going to come from the IRA custodian. And then so that's interesting. Now, as far as the checkbook IRA, is that something that you guys do as well over at Cama Plan there, where you start an LLC that's managed by the owner of the IRA, but still owned by the IRA itself? Is that something you're familiar with there?
We do that, yes, and yeah, we do that. At one point, we were discouraging them. We like to see them formalized. You'll want to do it with an attorney who understands the process and sets it up as a special purpose vehicle expressly for use with that IRA.
Mm-hmm.
And I think that's really important. Yes, we do them, but we can recommend some attorneys to set that up if that's what you would need.
Right. But there's certain risks to that, because now you're solely responsible for making sure you don't do the wrong things with that money in your IRA. And
absolutely.
Right.
Absolutely. Yeah. And this is why we're very careful with it. It's not for everybody. Your paperwork has to be kitchen clean. You have to keep your records properly. It's something that attracts attention, and it's the unusual activities that attract attention with any kind of tax matter, whether it's your income taxes that you file every year or something like this. So,
yeah,
yes, we do them.
I remember one story. A gentleman was telling me where he had a friend or something like that that had created a checkbook IRA LLC account, as they call it, which, is an LLC that's owned by your IRA but managed by you. And he went to Home Depot and he got a Home Depot credit card in that LLC name. And right there, he violated the rules of that checkbook IRA account because he got recourse debt, which an IRA cannot take on recourse debt. And that's exactly why we structure our investments a certain way, where the LP investors are not taking on any recourse debt, even if the GPs are. So it's an IRA-friendly investment. But that's probably something you may have seen before as well. Right? It's one of those horror stories out there.
Yes, yes. And this is why we advise you to get proper counsel for this stuff, because you want to set it up the right way from the get-go. IRAs can borrow money in a non-recourse situation where that IRA is the sole collateral for that loan. But again, for an IRA, you're also going to pay taxes on any income generated in proportion to the amount of money that was borrowed to acquire that asset. So if you put $50,000 down on a $100,000, just to keep everything even Steven, and you borrow the remaining 50,000, 50% of the income, at least in the first year, would be taxable as UDFI.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Okay, interesting. So, now let's say, I wanted to get a beach house with my IRA. Okay, so I go to Cama Plan, I roll my 401k over, I have a self-directed IRA account, and I go and I buy that beach house. And but I like to go there in August with my family. And so, I take my family down there. Of course, I'm not going to pay myself rent. That'd be ridiculous. We're going to enjoy this beautiful beach house we have at the Jersey Shore. Maybe it's an LBI or where I first fell in love or areas like that, Joe, where you could really have a nice time. What would that be okay? What do you think?
No. And we get this question all the time. It's, my daughter's going off to Penn State. I'm thinking about she's a junior now. She's going to be a senior. She's committed to go there. I'm looking at property. I want to get a condo, figure her friends or classmates could rent the thing out and she'd live there for free. And unfortunately, you can't do that. So there are some differences I'll send some things that you can send to anyone who inquires about the differences between doing this as a strictly non-qualified landlord versus doing it inside of an IRA. There are a few limitations, and one of them is no personal use. People say, well, how are they going to know? Well, you mentioned it that your vacation house is an IRA and next to your neighbor during a barbecue, and you guys have a falling out, and he knows something that's that's not particularly kosher, and they may drop the dime on you. Divorce. I mean, there's all sorts of things that can happen. And it's not worth it, frankly, because the penalties are too enormous. So,
yeah.
The benefits of owning it, and I've got again a couple of slides I can send to you, are so vast that it's worth the headache, so to speak, of doing it this way. I go through a process where I describe the accounts, what you can't do, what you can do. And you got to watch out for this. You got to watch out for that. And everybody says, well, why do I do this? Why should I do this? Well, when I show them the additional money they make in terms of being able to not have to pay income tax, not have to pay capital gains tax, not have to pay depreciation recapture when you sell a property, all of those things add up. And the same thing for investing with Peoples. I mean, you get to keep all of that. You put that inside of a Roth and it's yours. All that income is yours and it's tax free. You'll never be taxed on it. And I'm not sure if your audience knows the difference between the traditional IRAs and the Roth IRAs, but we can get into that if you want.
Yeah, and also just the idea of growing your investment faster, with alternative investments, right? And of course, there's no guarantee, but generally what we're trying to do is somewhat double our investors' investment over a 5 to 7 year period. And normally in the stock market, especially with the 401ks that are kind of heavily managed, you have fees and things like that, that are taken as well. People maybe double their money over like a 10-year period. So
Mhm.
often what a lot of our clients are saying is, I was able to accelerate my return on investment and grow my IRA almost twice as fast by diversifying some of my IRA, into real estate. Obviously, you want to be with the right operator and being invested wisely in the right deals.
Mhm.
But so what are some other alternatives though people invest in commonly besides real estate with their
It,
IRA?
it is virtually unlimited except for a handful of things. Our predominant asset class is real estate, and that's not only direct ownership of real estate like rental properties, but also private lending for real estate deals, participation in syndications, debt funds, yeah, equity deals, triple net lease commercial deals. It's kind of endless. So you can lend money out of your IRA to people who do fix and flips. You can participate in funds. It's what you would do with people's. You can own property. You can also invest in business ventures. We have a lot of people that retire or have left jobs within an industry in which they are an expert. They've spent 30 or 40 years in packaging or logistics, and they understand the business very well. And now they're in a position to invest in new technologies and new ventures within those industries. And that's kind of exciting because we say it gives you more control. You invest in what you know. We do get a
Mm-hmm.
lot of people from real estate and banking and finance and the
Mm-hmm.
mortgage industry coming into this business because they understand a lot of it. They understand the dynamics. So if
Yeah.
you're in a particular industry or business and you've been in an executive position or you've had ownership, you can invest in new technologies, intellectual property, startup ventures within there. We had a guy had a dump truck in his IRA.
Huh.
Essentially, it's a piece of real estate. He was leasing it out to construction companies.
Right.
So
Right.
his IRA acquired it, brought it in, and he was leasing it out.
I like
So
that.
yeah, there's a handful of things you can't do. Fine art, numismatic coins, booze, things like that. Things where the values are very subjective, very
Mhm.
hard to pin down. Yes, you can get appraisals for art and all that stuff, but they
Sure.
generally it's a little bit more difficult, a little bit more subjective than it would be, say, for a four-unit apartment building in North Miami Beach, Florida. So
Yeah. Yeah. Of
it's a
course.
little easier to identify or to value.
Yeah. Yeah. So is the most common asset class you see people self-direct their IRA into, is it real estate or is it? Yeah.
Right now, it's real estate, but a lot of people got into private lending when interest rates declined in the early part of the 2000s.
Yeah.
As interest rates are, people were living on great interest rate, retired doctors and whatnot, and they saw the interest rates decline, and they began to lend privately to people who did not have the time or did not have the chops to go into the banking system
Right.
and borrow money there. So they were able to do that. They graduated into more sophisticated real estate deals, multifamily housing and
Sure.
syndications and whatnot. But now, some of those people are successful enough, they want to become their own private equity firms. And
Mm.
they're heading into the family office territory,
Yeah. Yeah.
in the $25 million range or $50 million range. And so
Right.
now they're looking at ventures, and with onshoring and all the other trends that are apparent
Hmm.
in various parts of the American economy and the global economy for that matter, investing in ventures because they're seeing with the real estate deals they get say a preferred return, maybe at a 1.2x at the end of the 3 to 5 year period, and they're looking over at the venture guys who are getting 5x and 7x and 10x returns and say, hey, I think I can go play over there. So we're seeing
Yeah.
more interest in ventures.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, venture capital is very interesting. It's high risk, but it can be high reward, right? So you don't think of it as an ideal fit for your IRA, but if you have a few million in the IRA and you're going to take maybe 10 or 20% and wisely invest into well-researched companies as venture capitalist, you could do very well because all you need is one to hit it big, and you can really do very well at the end
Yeah,
of the day.
there's
And
there's a great example of that is that Peter Thiel
yeah,
is one of the
Peter
founder of
Thiel, yeah,
PayPal. Yeah,
yeah,
and he bought his shares of stock at the beginning with
uh-huh.
what, for pennies on the well, literally not tiny fractions of a penny on the dollar
Right,
today.
right,
And he put that in his Roth IRA, and he's at 2017 or 18, he had $1 billion in his Roth that he will
yeah,
never pay tax on. So
uh-huh.
why wouldn't you do that? We have some examples of real estate deals inside and outside of the IRA, and generally you're ahead by 25 to 40%, depending
Sure,
on how long you hold that property. So again, if you're willing to be patient, you're under 59 and a half, you don't need it for income. But even if you did do investing for income and you owned multifamily
hmm
property to derive income on which to live, there's no reason why you can't put your qualified 401k and IRA money together with your non-qualified money and invest as partners.
yeah, yeah,
I've done that with a couple of deals that I've got a little LLC vehicle that I use for private lending, and I've paired
mhm.
up with my 401k and lent money on it before.
Sure, there you go,
So,
yeah.
yeah.
That's great. Now, didn't they change the laws because Peter Thiel did so well with his IRA? Did they make it like more restrictive in some way based on his story?
I have not heard because there's no
Oh,
restrictions on what you can earn there. And I
right,
I
right.
I would imagine, because they're looking for pennies under the seat cushions now, that at
Yeah,
some point they may say, well, no more Roths, and they'll grandfather everybody that's already in. So
yeah,
you want to get it open. There's
right.
a 5-year look back for those of you who are who are up in, say, my age category,
hmm
in terms of getting that thing open so you can move assets into it or funds into it, do your
hmm
Roth conversions, and then you will never, henceforth pay any taxes on it.
Yeah,
So you
yeah.
want to get that open. It's a great vehicle. Start them for your kids.
hmm
The sooner the better.
Yeah, I went with a Roth myself, because in my late 30s, so I plan on, well, I'm 37, so I guess that's mid 30s still, right? I'm
Yeah.
gonna say mid 30s. Okay,
Yeah.
so yeah, I'm gonna go with that one. So
Well, I'm
um
a little bit less than twice your age, so
well, Joe,
I
you
wish I would have gotten started at your age. That would have been
you
great.
still got most of your hair, so you're doing pretty well. You're
Yeah.
doing something right.
Hey,
Good.
I'll latch on to any virility I can at this point in my life. So,
That's great. All right, excellent, excellent. So now let's just talk about the cost, right? Because at the end of the
okay.
day, that's a factor I'm sure people want to know about. So, what would it cost to open an account, to maintain an account? Do I get hit with a big fee every year or something like that? And how do the fees work?
All right, let's walk through a typical account that gets opened and puts a single asset in it. All
Yeah.
right. And then I'll get into the gradations of it. From a 30,000-foot view, a full service brokerage firm charges between 1 and 2%
hmm
of your account value each year.
hmm
I do these calculations for our clients all the time, and it rarely comes, and this is with transaction fees and everything else, it rarely comes out to more than 1/2 of 1%, maybe 3/4 of 1% per year.
hmm
So the typical account gets open. We charge $75 to open the account. There's no charge for doing transfers and rollovers to bring funding over. If you've got cash in your account and you're not ready to invest, there's no annual fee on cash. We
hmm
do say that you should have a $4,000 balance, but there's no fee on that. So you've spent $75 to open it. And let's say you're going to invest with Peoples, and you sign your documents, and then you log on to your account, you do your asset purchase directive, and the money goes out, and that's $150 for that asset purchase,
hmm
plus
Okay.
$10 for an ACH check, or $30 for a wire. So you're
Wire.
into it for $225 plus $10. Okay, so
hmm
$235. Then each year we charge $300 per asset. And that asset could be worth $50,000 or $50 billion. It doesn't matter. It's the
Wow.
same. And we keep an eye out in your account, because as you accumulate assets, we don't want to hit you with $300 for every asset. You get up to 20 assets. We do have an account value basis, a fee basis for that. And it's a multiple of your account value. And again, I could put a customized scenario together for anybody who's interested and is curious about this before you commit, so you know what you're getting into, but it rarely comes out to be more than a half or 3/4%. And let's say you leave that asset in your account, your fees actually go down because you're not buying an asset every year. All right. You're not opening your account every year. It's simply a flat fee per asset, or a flat fee based upon the size of your account. And I know where the crossovers are. So I got a little calculator and I just plug them in there, and we police it pretty aggressively. We don't want anybody overpaying for fees. We want you to stay here, for a decade or longer.
Yeah. Yeah. No, that's great. Yeah. Everyone I've worked with who self-directed their IRA have never complained about the fees. For the most part, it's very affordable to do it. And it's a pretty straightforward process. It's pretty easy, with the right IRA custodian like Cama Plan, you're pretty much just going to follow their direction in the process. And it does take about 2 to 4 weeks between the whole rollover process and then, the approval of the next investment and so on. So it's about a 30-day process. So I would just give people a heads up too. If you're looking to invest in an investment that's time sensitive, like real estate investments can be, you want to give yourself about a 30-day window to start your account, roll the money over, get the new investment approved, and get that investment completed, just to be safe there. No, it's great stuff, Joe. I really appreciate you coming on and talking about this. You're obviously a wealth of information here.
Oh, happy to do it. Happy to do it.
It's good stuff, and I'm excited to by the way, come on your podcast or do that webinar with you. I'm excited to do some more stuff with you as well.
We are.
There.
Yeah, we're gonna have fun with that because we're gonna get to learn about what you guys are up to.
Yeah.
For our audience. So yeah.
That'd be great. That'd be great. So, by the way, ladies and gentlemen, I'm going to put Joe's information in the show notes. All right. So we'll put the website for Cama Plan. We'll put his email there, and you could reach out to Joe and get that information. And then, Joe, definitely shoot over that document you're talking about with all those details. I'll send it out to investors that are looking to self-direct their IRA into real estate, and will be a source for them. Where can people learn more about what you do, and how can they get in touch with you?
You can go to www.camaplan.com. You can call me at 215-283-2868. Just ask for me. They'll find me, and I'll answer any questions you have. There's a wealth of resources at the site. We have also a weekly podcast called The Road to Financial Freedom, where we interview people who've taken a journey with self-directed investing, and it's a great program. Michael Duncan is our producer. He does a great job on that. We also do weekly webinars, and you just mentioned you're going to be on our webinar soon, and we're looking forward to that. So yeah, and there's a lot of downloadable reports on how to do things. We have one called 20 ways to fund your next deal. If you think you don't have enough money, you'll be surprised what you can do with a limited amount of funds to make a deal happen.
Yeah. You can always rob a bank too. That's not a bad way to really just
a high risk investment. Yes.
That is a high risk strategy. Yeah. We do not advise that. Plus you're limited to, I think, 6,500 you can put into your IRAs. So, you
really can't do anything with it.
Yeah. It'd be a small, very minute, wouldn't be worth the risk for that. Would definitely wouldn't be worth it.
No.
We do not advise that. All right, great, Joe. Thanks for coming on here. And to our listeners, I hope you're enjoying our content here at the Passive Cash Flow Podcast. And we'll continue to have excellent guests on, excellent information on how to passively build your wealth and create the best tax advantages as well to keep more of your money and give less of it to the IRS. So continue to share our information here, and like and subscribe if you're enjoying our content. And thank you again to all our listeners here at the Passive Cash Flow Podcast. My name is Aaron Fragnito. Enjoy your day.